All right, we have seen the price of oil higher today. Now, keep in mind, crude prices are still down from their mid-January peak, and I know the tariff uncertainty is part of that story, but there was also a concern about a possible supply glut. Well, we got some industry data in the United States suggesting that perhaps there's a different story on supply, but let's talk a little bit more about what's driving oil. Andy Lipow joining us, president of Lipow Oil Associates. Andy, good to see you. Let's start with this news of the day. So it seems like a suggestion of a tighter U.S. supply market has helped the price of oil today. Why don't you explain what you're seeing?
Well, good morning, and thanks for having me. I think that the reason that we're seeing prices up today is on the back of the API inventories coming out yesterday, which showed a greater than expected draw in crude oil of about 4.5 million barrels. At the same time, gasoline and distillate inventories drew as well. Part of this can be due to refiners returning from seasonal maintenance, but we have seen over the last several months crude oil inventories increase in the U.S. at the same time that strategic petroleum reserve filling has been continuing.
Okay, so that's helpful context on the U.S. story. Correct me if I'm wrong, but OPEC plus production plans at a time when people started to get worried about the overall economy was kind of a 1-2 macro story that was impacting oil. What is the current thinking about production globally? What OPEC Plus is thinking right now?
Well, I think what OPEC Plus did last month was really quite a surprise to the market, given that Brent prices are hovering around $70 a barrel. OPEC Plus has agreed to begin the restoration of their voluntary production cuts of about 2.2 million barrels a day over the next 18 months. And in addition, they're increasing the UAE's quota by an additional 300,000 barrels a day. When we look at that in the context of the forecast of oil demand growth of about 1 million barrels a day, the market isn't particularly worried about additional supplies coming to the market, especially when we see record production out of the US, Canada, Guyana, and Brazil. Now, the flip side of the story is sanctions, or the enforcement of sanctions on Venezuela and Iran, where Venezuela has been exporting about 750,000 barrels a day of crude oil, and Iran is exporting nearly 1.6 million barrels a day of crude oil and condensate. And the majority of these countries' exports is going to China.
So against all of that, because it gets a little confusing, and then I should add to this, we spend so much time listening to the headlines coming out of the White House. If memory serves, on the campaign trail, President Trump was talking about his desire to see a lower oil price. When you put everything together, Andy, what do you think? Where do you think oil prices are headed?
Well, I think that oil prices are going to continue to remain under pressure. We're seeing Brent, I think, is going to remain stuck in a range between $70 and $75 a barrel over the next 6 months, certainly, given the dynamics that we're seeing on the supply side. And we're going to have to wait and see how these sanctions actually pan out. You know, what I do wonder about is whether Venezuela and Iran will discount their oil sufficiently such that Chinese independent refiners are willing to take the risk to circumvent sanctions, because so much money will be on the table due to discounted pricing of oil.
Before I let you go, obviously, as you well know, here in Canada, everybody's trying to figure out where the country nets out in light of this trade war uncertainty. There's going to be a lot of talk over the next few weeks about Canada leveraging its energy opportunity as well. When you look at the Canadian energy production, whether it's oil or gas, where do you see the biggest opportunity for any, political leaders who are listening about what Canada can be doing or doing better? What would you say?
Well, certainly Canada needs more infrastructure to access Atlantic Basin and Pacific Basin markets through pipelines, and that's why you're hearing talk about reviving the Northern Gateway pipeline going to the West Coast, as well as the Energy East pipeline to the East Coast of Canada, because clearly Canada is very dependent on the U.S. through all the pipelines going to the mid-continent, supplying about 2.9 million barrels a day of oil.
Andy, thanks very much. Good to get your perspective. Andy Lipow joining us from Lipow Oil Associates on the energy market. Quick